This accounting mini lecture provides a summary of financial statement analysis. When we're talking about financial statement analysis, we have four basic areas. We have liquidity and efficiency, we have solvency, profitability, and market prospects. There will be some additional videos that cover specific ratios within these categories, but for now we're just going to focus on the four basic categories and exactly what we're looking for in these categories. Let's start with liquidity and efficiency. Liquidity basically refers to a company's ability to pay their short-term debts as they become due. So when we're thinking about liquidity, we're really thinking about cash flow. We want to make sure that the company can generate enough cash that they're going to be able to pay their bills as those bills become due. Now, when we're thinking about efficiency, we're really thinking about management's efficiency in not only managing the cash, but also managing inventory, which is an important part of the business for a merchandiser or manufacturer. So some of the ratios that we might use, liquidity, some of the more common ratios that we'll use would be the current ratio and the acid test ratio. For efficiency, we often look at turnover ratios, such as the accounts receivable turnover and the inventory turnover. And from those computations, we can also compute our days sales in inventory and our days sales uncollected, or sometimes this will be called days sales outstanding, or DSO. Okay. Solvency. Solvency refers to a company's ability to pay their debts on a long-term basis. So remember, liquidity, we were really focusing on the short term, say within the next year. Solvency is looking more on a long-term basis, looking at the debts the company has and are they going to be able to pay their interest payments as they become due, and then also are they going to be able to satisfy those long-term debts, such as notes payable, bonds payable. Some of the ratios that we might use to measure solvency: the debt ratio, the equity ratio, the times interest earned ratio. Okay. Profitability. Profitability just focuses on our ability to generate profits. Are we able to get a return on the sales that we are generating? Some of the more common measures of profitability might be profit margin, return on assets, or return on equity. And finally, we have market prospects. Anytime we're talking about market-focused ratios, we're really talking about the stock market and what analysts and investors expect to happen to a company's stock price in the future, what sort of value they perceive to be there for a given company. Some of the common ratios that we might review when looking at market prospects, we might look at the price-earnings ratio, which is typically called the PE ratio, and then we might also look at dividend yield. Thank you for watching this presentation on financial statement analysis.